Who are you?
My name is Debra Roberts. I am a business owner. I'm the Chief Executive Officer for DLR Accounting Solutions. I'm a CPA, and specialization is nonprofit and governmental. Tax advisory is a supplement to that.
Okay. And how long have you been doing this?
Oh my goodness. I have been in this field 40 years.
40 years.
I know, 40 years.
Now, have you had any other jobs in your life?
I started truly at the rock bottom. I was an intern for a public accounting firm doing, bookkeeping and that sort of thing.
Why did you decide to choose being a CPA?
I believe helping people make probably the most important decisions of their life was something I wanted to do. As you think about it, everything that you do centers around money. You don't have to be a CPA to know that if you don't have money, and if you don't know how to use money, you're in trouble. So what led me there was the reality that I could help people make decisions that impacts everything that they do. I do it within a business, I can do it with individuals, so that was really why I did it. I think I can help people. But when I got my degree, which was really where my career started, I started working in the construction industry doing, I would say, accounting type of functions, really low-level accounting positions. That means that I was preparing financial statements, I was doing account analysis, reconciliations.
And then after that, you decided to be a CPA.
Yes. Once I was finished my education, CPA was the first thing on my list of accomplishments. So that meant a lot of study and a lot of time to teach.
And you are a doctor.
Yes, but that was like recent. So I had to get my CPA for a host of reasons. A lot of things I couldn't do as a CPA. I had to have that CPA license in order to do.
Okay. Can you tell me a little bit about the transition between being a public accountant, then going to teaching?
Well, teaching does provide you the opportunity to instill in individuals that level of understanding that's beyond just technical skills. I was able to translate what was really going on in the real world with what's being taught in school. So I was that bridge. I thought it was very important. Most students go to school and they want to have some practical knowledge. How can I use this every day? And for students, even students who were not accounting majors, I told you, look, tell me what a non-accountant decision that you've ever made. Well, they would say, oh, well, I said, well, do you pay your mortgage? Did they qualify you for a loan? Did you buy a car? Did you, all these type of financial decisions? And they said, oh my goodness, I do need accounting, some form of accounting. I need it. So I think having that knowledge in the workplace and having that CPA that translated quite well when I started teaching, because I was able to give them real life experience, and it was no theory. This was what was happening right now. In the time, it was 2009 when I started teaching. So right now, I could tell you how to prepare a budget, and you can use that information right now to better control your spending. Everybody needs their accounting.
But
So
2009 is that's about 17 years ago. Can you tell me a little bit about what has changed as far as the expectations for an accountant in the past 17 years, as far as how it's changed since you started 40 years ago?
there's a uniform knowledge of the importance of accounting. People were, years ago, very much afraid of it. A lot of myths surrounding it. Accounting is math. It's not. So that was then. Now people understand it's the business language. Everybody needs to understand. If you're in business at all, you don't have to be an owner of a business, but if you're in business at all, that business language that you need to understand is accounting. So now people are more empowered. Now people are not afraid of accounting. Now they understand how it is a tool. Teaching accounting does not, I'm not in any way trying to make you a CPA, and I make that very clear with every person that I try to support. I'm not asking you to be a CPA, but these skills is not CPA skills. These are business decisions that have a financial impact on your life, and I think you need to understand why you're making a decision so that you can be powerful. You can be empowered to control your destiny, particularly from a financial point of view.
Okay. Now, as you said, most people have at least a rudimentary understanding of accounting. But there are some things that some businesses don't know. In your opinion, what is something that every small business should know in order, as far as accounting and as far as fiduciary advice?
Well, I would say every business owner, the leading cause of failure in a business is not your idea. It's not your vision. It's your lack of financial control. And that is what I try to tell people. I say, what you're trying to do, if you love it, it's a marketable skill, but it's not going to carry you. What's going to carry you and keep you into the future is understanding the financial side of things. And that's what I communicate to people. I think that it is essential. How do I bring that to small businesses? I start really with basics. Basics is, can you monitor and control your cash flow, which is critical. I teach them how to budget, really. Put together a budget that's workable. To take that budget and compare it with what you actually have done. And that gives you a lot of information. Business owners like, well, I generated $10,000 worth of revenue, but I'm spending $17,000. What am I doing? Why am I in the hole? And a budget will outline those, you're spending too much here, you're not spending enough there. So what I try to tell business owners is it is essential. If you want your business to last forever, you need to understand how to use financial information.
In your opinion, what's the most crucial mistake that nonprofit organizations make?
They don't understand why cash flow is important. They don't take that seriously. A nonprofit organization is different from a profit organization in that we're mission-based. But there's another big difference. An organization like Microsoft or Intuit, they generate revenue almost daily. At the very least, monthly general flow of revenue. You can't necessarily say that about a nonprofit organization. Unless you're a Goodwill and you have a little store and you're selling products, most nonprofit organizations have sporadic flows of cash inflow. They get it through donations, they get it through grants, they get it through kind of quasi revenue stream type of thing. They do something and they get revenue in return. But for the most part, their revenue stream and their cash flow is very sporadic. So the biggest mistake, I know it's a long time to say it, but the biggest mistake is not understanding the importance of cash flow management in a nonprofit.
Okay. Now, you've been a financial advisor to some extent for the better half of a century. As an advisor, how can you be certain that the changes that you make will be the best for the organization?
With my experience, as a business owner, but also as an employee of a business, understanding the structure of how businesses are run, understanding that you have to tie your financial operations to strategy, how to correlate that, and there's a bridge sometimes, depending on what, so you have to correlate your strategy with your finances, you have to build cash flow, you have to have a capacity to take numbers and utilize those numbers to guide what decisions are appropriate for your business. So that's...
Thank you. Now, you mentioned that you were a business owner. Can you tell me a little bit more about that?
Well, I've been working for the state for a number of years and working other jobs for a number of years, retired finally. With the business, my intention is to be much more focused on these small businesses, minority businesses that really are fledgling. They don't have money, but they still need the accounting, which is why we talk about fractional accounting and all of that. So that's really what I want to do with my business. I want to be able to reach those organizations and provide them with services that they could not possibly afford on their own.
Now, for posterity, have you started a business before?
Yes.
Can you tell me a little bit more about that as well?
That business was not an accounting firm, it was a consulting business. My husband and I worked on that business for, 20-some years, and we built it from nothing. Our approach was being appropriately leveraged means to have a acceptable level of debt and equity to make that organization grow or to facilitate growth. Our point of view was we're going to use equity in its entirety to grow. That means a slower growth pattern, but it was a steady growth pattern. But again, it's about your business and what your goals are, and what you're trying to accomplish, and then your timeline on accomplishing that goal.
Okay. Now, your firm, DLR Accounting Solutions, what is the main goal of your firm?
Our mission is to support small business and their financial strategies, help them accomplish their strategies. I would say my goal is to assist particularly nonprofits with accounting services that will align them with their strategy and for facilitating their growth. Those organizations generally do not have, smaller nonprofits do not have the financial resources for a full-time CFO. Our goal is to align our business with theirs, provide them with that CFO without the CFO price ticket.
Now, when you say CFO, just explain to me what that means.
A CFO is a chief financial officer, and generally in the non-for-profit as well as in the profit world, that's more or less an executive, a financial executive. This person generally would be a CPA, and that person is not a bookkeeper. It's very important. They are not going to be creating journal entries and that sort of thing. Although we're talking about a high-level executive. This executive is going to be providing strategic financial direction. They're going to be the subject matter expert for everything to do with their finances. That means strategy. That means what we sell, how we sell it, if it's profitable or not, what direction we want to go in, and using numbers, obviously, to provide that information to owners. We have a staff that have accountants and CFOs as well as marketing. So our service is going to be, from the lower level, will be more bookkeeping, account analysis, financial statements. I'm going to call them accountant, comptroller position type of work, and then fractional CFO.
Now, you've said fractional CFO a few times. What exactly is fractional?
It's all nomenclature. In the real world, it's outsourced CFO or outsourced Chief Financial Officer.
So, why specifically would a business need a CFO? A CEO is making executive decisions. What a business need a CFO?
A CFO provides key performance indicators. Simple as that. They are able to analyze data in a financial sense that will guide the decisions that a president will make. So performance indicators, it depends on the industry that you're working in, but if you want to know how you're performing, you want to get down to the nitty-gritty, presidents don't do that sort of thing. It's not bookkeeping, but it's definitely it's a factor into how do we analyze numbers in such a way that decisions can be made. Performance, investments, our earnings, that sort of thing.
Okay. Earlier in the interview, we had spoken about CFOs and their role as an executive in the business. My immediate question pops up into my head. Will the CFO change the structure of my business? In other words, am I still going to be in control of my company making those paramount decisions?
You will absolutely be control of your business. The outsourced CFO or fractional CFO is a partner. I'm here to partner alongside you. I align my strategy with your goals. My job here is to make certain that your goals are met and you are able to provide a service with a high level of profitability. I want you to make money. I want you to be able to run your company, to do what you love. You don't have to be a numbers person. You don't have to be a CFO. But I'm a partner. Alongside you, it's your business, your way. I provide advice for you to consider.
But how long are we going to expect? Is it safe to expect your CFOs to be retained within the company?
Well, see, that's the thing. It really does depend. Sometimes it depends on the organization and what their goals are, which is what you talk about when you're having these initial conversations. What are you looking to accomplish? What are you not getting right now with your current setup? What is your vision for the future? And are you able to manage your cash flow? Things like that. Based on answers to those type of questions, the relationship between myself and my client would be long-term, or it could be a short-term project. Generally, for a small business, it would be more of a long-term situation, simply because it does take time for most organizations, particularly when they're small, to be able to afford a full-time person on staff. Generally, I support organizations, and we would lead them to having somewhat like a controller type of position. Lead it to that point. And then as time goes on, they may ultimately afford to have a CFO on their own. I would suspect it would be a long-term relationship, really guided by your direction, by your goals, and how fast we can accomplish them.
Mm-hmm. So on average, what would be a good safe number in months to expect?
I generally prefer a 12-month. It gives your organization the time to clean your house, because a lot of times when you have you're looking at someone's books, you can see improvements that can be made, structural changes that can be made to support that organization in that process. So 12 months, I think, is a good gauge as to how long that relationship will be and how we can meet those goals that we discuss.
Now, as far as the interaction between your team, CFOs, and the nonprofit in question, can you describe that typical onboarding process for me?
That's a good question. Onboarding, it really does depend. Let's assume that I want a strategic partner. I don't want a person handling my bookkeeping, but I will be working alongside that bookkeeper or comptroller, whatever that title might be. The onboarding process is me asking lots of questions. I have a structured interview questionnaire, generally, that I would provide, and it really is customized in some extent to the organization and the industry. But that questionnaire will be answered just a yes or no, that kind of thing. And it will give me what I need to start working, meaning a trial balance, possibly looking at some bank statements, looking at, if you have prepared financial statements, looking at that. The onboarding process is me getting information from you based on our interview, our onboarding interview, to get an idea of what I'm looking at. You know, for strategies, I need to get an analysis of your organization, what's going well and what's not, what's happening and what's not. If you have employees that are doing some accounting work, what the internal controls look like, you know, who does what, that type of thing. Is it reviewed? So the onboarding process is me gathering a lot of information, some of interviews, some of looking at your data, and forming an assessment of where you are. Basically, it's like going to a doctor and getting your vitals done. That's exactly what I'm doing. I'm getting your vitals. It's essential. And so I get a kind of a vital statistics of your organization and give you analysis of what I've seen so far. That's the starting point, and it's generally happening during the onboarding process, which is generally deployed by a month of looking at your work.
And after that initial analysis, then what happens next?
The analysis, that's and it requires some assumption. Yes, after I've done that interview and I've reviewed your work, I will identify some strengths. I will identify some things that you're doing that's working very well. I will provide you with some ideas of how to structure your organization in the financial area. And again, it does depend on what you're actually looking for from my partnership with you. But I will have what you're doing well, what you're not doing well. These are areas of holes that I think you need to plug up, because it could be a potential problem. Then we can start talking about strategy. Because I mean, there's always something that you can do to improve your organization and how it runs. So that's the most important thing. Help you do things better and help you save money. That's another issue. Can we save some money? We can streamline our process and help you with your cash flow management, so to speak. So I will be giving you some best practices in that next round of communications.
And can you just talk to me a little bit about what the long-term goal of your firm is? What are you hoping to achieve by this firm? What's the hopeful takeaway? What are we, and most importantly, what does this mean to you long term?
This organization has been a long time coming. my first business, as I mentioned to you, was really a consulting practice, not necessarily focusing on accounting and so forth. This has been a love child for many, many years, something that I always wanted to do. So that's the first thing. It's not going to be something for 5 years or 10 years. I have no intentions of stopping this. I think it's going to continue, and I think it's going to continue such that the organization will grow and I'll hire more people and we'll grow and we'll grow and we'll grow. So that's the most important thing. It's a long time coming. I believe it's right now. The niche is companies are really starting to restructure and rethink about how they utilize services such as these. And they're realigning their priorities with AI coming in and streamlining a lot of processes that was done by humans. So organizations are becoming much more strategic in how they use human capital. And for me, that's an opportunity to say, I can help you with that, because you don't have to be committed to an employment relationship, which comes with the salary, the benefits, and all of that risk that's associated with having staff. So how I see the business, I see it growing. I see my partnerships that I create increasing. I see being expanding to different industries outside of nonprofit. I see more governmental working, consulting work in my future. I see growth really for us.
Now, it seems like we have a little bit more time. Do you feel comfortable answering a few other questions off the cuff?
Yeah.
Okay, thank you. How do you think AI is currently affecting your business?
It doesn't affect it directly. Now, AI that I use is more on an editorial level. But accounting and auditing, we've been using it for years. Nobody really talks about that, but CPA's been using analytics for years. When I say that is, we're auditing and we're doing analysis and we're looking at large volumes of data and we're trying to detect anomalies for testing, etc. We can't just look at someone's books and just automatically pick something out of the air. We use analytics to do that. So we've been using AI for quite a while, and for purposes of this, I'm going to continue that process. I'm going to continue to use AI, not just for crafting the language that I use in my communications, but I'm also going to be using it for analyzing large volumes of data, as all CPAs have been doing, particularly ones who perform audits. There's no way to look at 1,000 pages worth of data or 1,000 pieces of information on inventory. We need AI to help us to do that. So, as far as the profession is concerned, AI is not a new thing. It's just not. But see, the thing is, we never talk about it.
Right.
We just talk about it like this. We use terms like data analytics. We use it for standard testing. Machine learning. We never use AI in that terminology, but quite frankly, we have been using it. And we will continue to use it. We have standards within the AICPA and with our state licensor that guides what we use, how we use it, and also how transparent that is. We tell our client, basically.
Yeah.
So we've been using it ethically for many, many, many years. Now it's in vogue, because it's been tapped into other industries and areas. But CPAs has been using it for years.
Thank God. So it's not unfamiliar.
It's not unfamiliar.
Okay. I have one more question. It'll come back to me later. But I think that's all for today.
Okay.
I'd really like to thank you for your time, Debra. It's been wonderful.
Thank you.
God bless.
All right.